And the short volatility party just goes on and on, folks. We'll talk about the VIX term structure, the VIX, UVXY, VXX, VXXB, and more coming up right now on the Short Vol Show live. Stay with me, folks.
My grandpa, see your grandpa, sitting by the fire. My grandma, see your grandpa, gonna set your tang on fire. Talk about hey now, hey now.
All right, all I can say is that all you have for us, VIX? Is that all you have for a spike for us right now? All these people talking about the market's going to downturn and this rally isn't for real and don't believe it and short every rally in the E-minis or the SPX. But that was a pretty weak attempt at a volatility spike this morning, if I do say so myself. It seems like the short vol party is back on, and we could end up for the second day in a row today in contango and to start building on that contango. And what do I mean by building on contango? Well, right now it's basically like we're barely in contango. We're basically like flatlining pretty much as far as the term structure goes. What am I talking about, you might be asking? Maybe you're not into the VIX and all these things. Well, real quickly, this channel is about the VIX and the VIX term structure. We give you daily coverage of the VIX and the VIX term structure. What is the VIX? The VIX is the fear gauge. Came about in the late 90s, and it is based on a formula, and the formula has changed over time, but right now it's based on a formula of a strip of options in the SPX, and they date these option prices, they put them through this formula, out comes this number, that's the VIX. And the VIX spiked way up to 35 with the market downturn recently, and is now back to 20, which is right in its historical midpoint, basically. Some people might say it's 26, but right around in the 20s, let's say, in the low 20s is the historical midpoint. The recent midpoint, though, would be lower, as we spent most of 2017 below a 14 VIX. But right now, hanging out right around 20. And the VIX term structure, however, so you see the VIX, there's no way to trade the VIX directly. You can trade futures based on the VIX, and those futures, they come from different months, and they generally stack up in different shapes as you go out in the months. The most normal shape is in contango, where you have each month as you go out farther in time is more expensive, and so you have an upwardly sloping curve. You know, people talk about the curve of bond yield. People talk about the curve of SPX or NASDAQ futures, or they talk about the term structure of, let's say, oil. But in this case, we have the VIX, and the VIX term structure is unique in that there is no real arbitrage between the cash and the futures. That is to say, the futures can kind of act a little bit on their own compared with the actual VIX. They move around kind of freely, and there's no way that they get brought back into line immediately due to the fact that there is no way that someone can sort of buy the VIX and sell the futures if the VIX is lower, or sell the VIX and buy the futures if the VIX is higher. So let's take a look at the term structure right now. And I hope I haven't confused you too much as it is. Term structure here, and it's behind my head, so you really can't see it that well when it's behind my head. How about that? That's a little bit better. Okay, and it looks kind of wacky right there, but it's essentially flat. Take my word, that's sort of a flat structure. Now, ideally, what would happen is spot would go to like 18, and this would line up in a sort of a downward shape. Let me get my little pen and paper out here for a second. I feel like I'm popping into this mic a little bit. I need to get a pop filter on this. All right. So if I were to, I'm going to go like this so that I can draw on this. All right. So theoretically speaking, if we were to continue to rally, what would happen is the VIX would go. Is this working? Let's see. Yeah, okay. This is working. Theoretically speaking is if we were to continue to rally for a while, the VIX cash would go way lower. It would go down to like maybe down here, right? And then the futures thus would line up more in a shape. And it's kind of weird. I don't understand why I can't see my thing, but futures would end up in a shape kind of like they are in the back months now, but they would continue down like that, something like that, right? So in a world where we rally for the next month, the futures would look like I drew them there with the blue line. And then the let's see if we can fatten up this pen a little bit. And then the spot might be actually all the way down here, and it would look like that. That would be like a classic contango with a front month future, second month future, third month future. That's what we would look like. About 85% of the time, we look like that. That is a VIX term structure in contango. This would be the spot here. The blue line would be connecting the dots, which are the different futures, this being like a Jan future, Feb future, and so on and so forth. But right now, we're kind of in a transition state. We were in a state where the opposite was occurring, where spot was way above the futures, and the front month was the highest price, and then the second month was a little lower, third month was a little lower, which is called being in backwardation. But now we're basically flat. We can... there's a thing here that you can switch between wide and flat. If you go to narrow here, look, we're totally flat. So basically, when the term structure is way slanting into contango or way slanting in backwardation, it has a significant effect in the long term and even in the medium term on how you're going to trade a VIX product. However, with it so flat, it doesn't really have much of an effect right now. When we talk about, oh, we're in contango, which right now we're in contango by, it looks like by 20 cents or something, 2 cents. When we get all excited yesterday that we're in contango, it's just because it has turned that corner to being back in contango from being in backwardation. It doesn't right now. It's in 0.10% in contango, so that's really insignificant. We're basically flat. But the reason why everybody's tweeting about it and everything is because we have turned the corner out of backwardation into contango here. And so that's very exciting to everybody because it means we're back to a more normal situation. And that we will continue to normalize if volatility either A, stays where it is or goes lower from here. If volatility spikes higher, then we will be back in backwardation. But as long as volatility stays around here or creeps lower, we will be in contango still, which is our normal state of being and which makes us happy as VIX short traders. And that's why the party is still on, because you know, after 4 days of rally in a row, you know, there were, if you looked at investing.com coming this morning, they're like, oh, the market's giving back. People are taking profits. That's what they say when the market's down every day. People are taking profits. I guess you're taking profits if you happen to be long it and you sold it. And then after it goes down, you're like, oh, yeah, I took a profit. But if you're long it and it just goes back down, then you're not really taking profits, are you? So anyways, they always like to say, it makes it sound good when the market sells off to say, yeah, they're taking profits. It's like, no, the market's just going down, dude. So, I don't know where you are right now with your trades for the year. We are 10 days into the year, not 10 trading days because we've had some weekends in between, but we're 10 days into the new year. And there's been some discussion about which volatility ETP should you be trading because VXX is about to go bye-bye. Quote-unquote serious volatility traders don't trade UVXY. They trade like the futures, or they trade VIX options on the futures and VXX. I've learned that like it's more of like a retail thing to trade UVXY, although I don't really agree with that. I'm a big UVXY booster. And you'll see me on shows like the Options Insider Radio supporting my UVXY as a perfectly legitimate professional trading vehicle for trading volatility. However, many people will trade, that are pros, will trade just options on the VIX. And one of the most basic thing to remember if you do get into trading options on the VIX is if you're trading a certain month, you're going to trade futures for that month against your options position. If you're trading Feb options, you're going to trade those against Feb futures. You don't want to, it gets very confusing and very convoluted if you start getting into calendar spreads between months. Now, if you understand the term structure and you're an expert on volatility, then be my guest. Start trading calendar spreads in VIX options. However, if you're new to this stuff, I would recommend you hedge. If you're trading VIX against VIX options, you hedge whatever options you're trading. You hedge with the future from that month and leave it at that for now. Because otherwise you're going to get really confused and stuff is going to start acting really wacky and you're not going to know why, and you're going to be like, what is going on? Because as the term structure moves, those calendar spreads are going to move a lot more than they would in, say, an equity. So unless you're real hip to like the term structure and you're trying to make a play on what's going to happen with the term structure by using calendars in the VIX, I would stay away from that stuff, because otherwise it's just going to get real. Stuff's going to get real wacky on you. So, all right. So that's enough on the VIX for now. Let's talk about other equities. We've been following closely Tilray, because Tilray has a delusionary. It's getting diluted on January 15th, supposedly, with all these insider shares being allowed to be traded. So theoretically speaking, that means that all these people who, were awarded shares of Tilray for like 75 cents, you would think if like someone said, oh, well, your net worth is all in Tilray because you're a Tilray employee and you never traded the stock market before. If someone says, okay, now you can sell these things that we gave you for 75 cents for $80, you'd think that the first day you're going to be like, all right, fine, I'm out, and dump as many as you can get out of, or at least a certain percentage of people would do that. And that seems to stand to reason. However, in this sophisticated world that we are in, it's not above the possibility that people would borrow money and buy puts ahead of time or put risk collars on, risk reversals. A risk reversal is or a risk collar is a trade that you use it would be a perfect trade if you were stuck long Tilray and there was no way you were able to sell those shares, but you wanted to protect against it moving lower. And a risk reversal, a lot of times they'll talk about a risk reversal that doesn't cost you anything. And what you would do is Tilray, for example, trading 80 right now, you would sell an out-of-the-money call, and you would take the money that you collected from selling that out-of-the-money call, and you would buy an out-of-the-money put with that money. That way, if the thing tanks, you're going to make a bunch of money on that risk collar, and it's going to protect your long position in the stock that you're not allowed to sell till now. So let me just kind of illustrate that for you right now, because I know I'm talking kind of quickly, and if you haven't been into risk collars before, it might sound a little confusing. I can certainly understand. So, for example, Tilray, if you were not allowed to sell your shares until February, for example, you might want to buy a risk collar. So you might want to maybe sell the February 95 calls for, let's say, $219 here, and take that money and buy the February 40 puts. And this way, if this thing just tanks and falls out of bed, you will make money, and that money will offset your losses from being long the shares of the stock. Now, in this case, this trade is for a bit of a credit. That's because the call you sold is worth more than the put you bought. So there's different ways to hedge yourself and collect money against your position. And I just picked out two strikes really quickly that seemed close to one another. Maybe you would pick the Feb 95 and the 45 put, for example, as a better idea. Also, people will do over-the-counter products where they will just quote you a no-cost risk collar. They'll just say, okay, we're going to make one strike and then pick one strike in the call, and then we'll make a strike that exactly costs nothing. That's maybe in between the 40 and the 45 strike, for example, that is going to make it exactly cost neutral to put that collar on. But, I would think that insiders, when this thing started going to 300, would probably be going to their sophisticated friends or accountants or whatever and saying, how can I capitalize on this big move we've had in Tilray and get out of some of this long that I have on based on the being long these options. Now, I don't know if doing collars is legal, so I guess I should research that at some point. And I'm not advocating doing these things, but all I'm saying is that it seems too easy that on January 15th, all of a sudden, everybody's just going to tank this stock, and it's going to be like, oh, well, you can sell it on January 14th and buy it back on January 16th and make a huge profit. That's just not the way the stock market works. It doesn't work that someone just gives you a huge layup like that. And obviously, not a lot of people know about this Jan 15th dilution date, and so, it could be that market makers are already leaning short in it, or all kinds of stuff. But I do know that the stock did rip up a couple days ago by like $10. And so if people were leaning short a week ago anticipating this event, they got destroyed because we're up $10. Now, we'll see. We've faded back a little bit since then. Let's take a look at Tilray stock for a second for the last week or so. But we are anticipating January 15th as a big date. But you can see it's been not making new highs, but definitely it's ripped up in the last couple sessions. So we'll keep a close eye on Tilray soon and moving forward. Meanwhile, our FANG stocks kind of hanging in orbit today. Apple up 3 cents right now. Facebook up 8 cents. Then let's see what else we have. Amazon. Do I have an Amazon list? I'm not sure. Amazon. Is currently unchanged, basically, up 4 cents. $1,600 stock up 4 cents. So sharply unchanged is the market right now. Everything's unchanged right now. Amazingly, huh? E-minis up 6, Dow up 56, SPX up 4, NASDAQ up 13. Now, I apologize for tempting fates, because I did tempt fates with the trading guides a little bit by scoffing at the small spike we had in the VIX so far today. So I hope they don't come back and spike the VIX in my face for doing that. You need to be careful about the trading guides. They will come out and get you. If you, for example, if you should, and I should have probably mentioned this before to viewers, but if you make some money, if you have a good trade and you make some money, don't go on StockTwits or heaven forbid, if you're a YouTuber, go on YouTube and start bragging about it. If you make money on a trade, keep your mouth shut, because the trading gods will get you if you start bragging to people about it, A. And B, nobody wants to hear about it when you make money. If people aren't into the stock market, they're just going to be resentful of you. And if people aren't in the stock market, they'll probably be resentful as well. If it's a lose-lose situation. And when you lose money in the stock market, people that don't trade the market are like, oh, see, you're an idiot. It's just all gambling. And if you make money, then they're envious and resentful. So, but it's just not cool to brag about making money. If you do great on the trade, that's awesome. And, if you've got a buddy in your chat who's a close buddy who you compare notes with, you could privately say you did okay. But it's just not cool to go out there and say, oh, I made $18,450 today on trading Apple, and, you guys should have followed me when I told you to buy it. Because that's just obnoxious. And when people say that, that they're not real traders. So be cool. I want everybody to make money. I hope you make money. But we know real traders, A, don't make money every day. But B, don't sit there and brag about it. If you do well, that's awesome. And you know what they used to tell us? I don't know if they have 100 grand bars anymore, but they used to tell us in the pit, they said, if you make 100 grand, go buy yourself a 100 grand bar and keep your mouth shut. And then they said, and if we do really well, they're like, you should go and take your family out to Sizzler. Sizzler was like a fish place in the Midwest. Say, take your family out to Sizzler. So I don't know if you're in California, maybe you can go to In-N-Out Burger or something, or the Cheesecake Factory or something. But keep your mouth shut. Nobody likes a bragger. It's great. I want everybody to make money, and that's awesome. I hope you make $1 zillion trillion. But don't be obnoxious about it, please. All right. So, yeah, MJ stocks have come back a little bit lately. I've been noticing CGC slowly rallying like every day. Look at this move. Let me move out of the way once again. Look at this move in Canopy Growth. Just a really big rally. My old buddy ACB also a move up right now. Afria also a move up. You know, we're seeing an upswing in these issues. So it's a risky business out there, but it seems to be one to be in right now. I don't know if we've missed the move again to the upside, but they are all moving to the upside right now. Tesla, back. It bounces off 300 again. So this has had a range between 300 and 390. It's just, it has stayed within that range for like a year or two now. It's unbelievable. Look at this chart. It's just, it swings to this range. No, it got all the way down to 247, but it can't seem to get above 400, but it just oscillates in this range. It's just an amazing issue. And I guess they said that they're going to discontinue the sale of cheaper cars. Excuse me, I'm about to sneeze. They're going to discontinue the sale of cheaper Teslas coming out soon. And, you know, like I said, my dad hates Elon Musk just because I think maybe Fox News told him to hate Elon Musk. Oh, I know why. Because he thinks the guy only made money because Obama gave him these incentives to make for his solar company, Solar City, and also to make like his cars. And so my dad hates Obama. It's funny. He hates Obama, but he also hates Elon Musk. It's kind of funny. Anyway, but for me, as far as I'm concerned, I'm not making any political statements. We like all affiliations here, and I'm not saying anything about politics. You can guess which affiliation I have because I will not talk about it on here. Let's go to StockTwits for a second and see what is going on. And let's go actually to the chat and say hi to everybody in chat here. And I'm cranking up the other screen here, make sure it's off. Hey to the chat, what's going on, y'all? That didn't quite work either. Anyway, so I guess that's all I have for you right now. Market is kind of hanging out. We are kind of at an important point. It kind of seems as like we're brushing up against and kind of moving sideways for a little while here and brushing up against the bottom of that sort of volatility box, and we've kind of stagnated here. So we're going to have to see if the market can kind of regroup here and make a push higher, or if it's going to swing back down and try to retest the lows. You know, a lot of people are saying, well, it's going to retest the lows, and then that will be the moment of truth. Either it double bottoms, and then we know that's the bottom, and it rips higher, or it goes lower. But, you know, this could be the moment of truth here, too, where it just, you know, it kind of forms a base here and kind of messes around a little bit right in this area and then rushes higher. We'll have to kind of wait and see what happens here. But either way, volatility is hanging out here around 20. And like I said, the VIX term structure is flat. So place your bets. If you want to get long, there's no penalty for getting long right now. We're not really in contango. There's no the term structure does not give edge either way. So feel very comfortable getting long TVIX if you want to bet long volatility, or getting long VXX. And also if you want to get short, feel comfortable getting short these things, because term structure is not giving edge either way right here. All right, so thanks everybody for watching, and I appreciate all the support from everybody who watches the show. And I love all your comments. Please keep them coming. This is going to be a very profitable year for all of us. I can feel it already. It's been a great month so far for me personally, and I'm not bragging because I don't want the wrath of the trading gods up there. And it sounds like I'm joking about this, but I'm very serious. You do not want to tempt fate with the trading gods, because they will humble anybody. So stay humble, work hard, and we can all profit together. All right. Thanks so much for watching, and we will see you next time on the Short Vol Show live. I'm just queuing up my my past Jerry Garcia here, and we will end with that. Although not too long, because I don't want to get YouTube banning me or like, you know, giving me a content strike. Bye-bye.